It's week 4 of my NVDA Options Wheel Tracker, and both the put and the call are expiring out of the money today. I tried to roll the $180 covered call straight out 1 week, but the order wouldn't fill. After a bit of troubleshooting, I realized I'll just have to let it expire today and come back to sell a new call on Monday. That's not my preferred approach since I don't know whether Monday will give me a better trade or a less desirable one, but I didn't want to sell a naked call, and this was my only choice. The cash secured put was an easier decision. I compared a straight roll with a roll down, and the choice was immediately obvious. Watch the video and see which way I went and why. Almost all of the extrinsic value of these two positions has eroded. I'm going to need to pay about $13 to close the put and less than $1 to close the call. I'm going to start by rolling out this $185 covered call 1 week. Then we'll come back and I'll make a decision about the put, whether to roll it straight out or try to roll it down $5 a share. Rolling the call and keeping the same strike price will generate at least $293. I'm going to ask for $295, but if it doesn't fill, I'll drop my ask by $1 or $2. After waiting a minute, it hasn't filled, so I'm going to edit it and lower my ask from $294 to $293. Just to speed things up, I'm actually going to drop my ask below the current bid. In spite of multiple orders at different price points, I could not get this roll to fill. So I'm going to go back and look at the option chain and see if I can figure out why. And here's my answer. This 0 here by the bid means that there are no bids at any price to close my existing contract. And because I am very risk averse, I am not going to sell a new call until I close this one. And since I can't close it with an order, I'm just going to have to let it expire at the end of the day and go back on Monday and sell a new covered call expiring August 29th. Selling it today would generate about $300 or $305, and I don't know where the share price will be on Monday. I may get a better fill or I may get one that is not as good, but I'm just going to leave this alone and wait to sell a call on Monday, and I will record it then. So let's go back to this cash secured put. I have a $175 cash secured put expiring today, and it's going to cost $10 or $11 to close it. And you can see there is considerable open interest in this particular strike, so it should be easier to roll this one than it was to roll the call. Before I place the order, I'm going to go take a look at the option chain to see what's available for next week. I'm deciding whether I want to roll straight out to maximize my income. I can generate $490 selling the $175 put again. Or if I roll it down to $170, I can still generate $300 in 1 week and lower my strike price by $5. So I think I'm going to do that. I could even go down to $165, but I have pretty strong confidence in NVIDIA. And even if the price pulls back, I can continue to roll it straight out while I wait for it to recover. So I'm going to drop my strike a little bit, but I'm not going to drop it all the way down to $165. The order filled at $295. A $293.68 return on $17,000 of collateral comes out to a very respectable 90.08% annualized return. The share price today is $177.68. I record that number 2 places because it is the share price at the opening of today's contract and the price at the closing of last week's contract. So you can see that even though the share price has pulled back about $2.50, I have over the last 2 trades generated almost $300, $400, a little more than $400. So this one is now closed. This contract is open for one more week. And on Monday, I'm going to sell to open a covered call at 185, expiring on 8/29. I'm going to leave this white so I remember that I haven't actually made that trade yet. This contract is only going to be open for 4 days, which is going to increase my annualized rate of return because the 3 days over the weekend are not going to be taken into account. So this annualized rate of return is going to look a little bit inflated because of the 4-day holding period. I may go back and just keep this at 7 anyway. This is just an accounting thing that I'm kind of picky about. So I'll do this on Monday, and next Friday we'll see where everything stands.